Yeah.
What does it mean for where you want to put your money, or at least what kind of valuations you'll see going forward?
So
generally, against this backdrop of slow growth momentum and still very prominent inflationary pressures, we have neutralized our positions in risky asset classes, so neutralized our global equities versus bonds positions in a multi-asset.
hello, hope you're well. So good morning. Please, I wanted to just let you know what's happening in the markets.
Benefit an environment.
So there's some news running because I told you we'll be doing more of technical. So class should be beginning right now. So for those who are late, today I don't have enough much time because I have a lot of meetings. So let's get started. So basically this is the news about oil. So I just wanted you to see this is how we trade the markets. So oil was at minus 37 by last year. So at least this is oil Brent. So let me show you so that at least you're able to know what is causing inflation. Let's do that. So already oil hit above $80 per barrel. So crude almost hit negative territory last year because of course of COVID. So right now the energy crunch is high. You can see energy crunch means the demand is too high. So you can see our lowest was almost 19. This was on Brent. So today I'll be introducing you to technical analysis. So this was on, let me see. So I hope I'm visible and I'm also audible. Yeah, this was on April last year. You can see it was really low. And then this has been the recovery. So this was since April. So you can see the recovery has been up. Now we are at almost $83 per barrel. So of course, to be hitting 100, I told you, because of the demand is too high. So even if I zoom out, I think this is the highest since 2014. Yeah, because the last time oil was this high was in 2014, 2018. Yeah, so let's get started for today's class, because today I was supposed to give you introduction to technical analysis. Okay, let me go to my notes. So I'll begin with this. So let's begin with the terms. There we are. So the Forex come with a lot of terms, terminologies, and the rest. So I just wanted to tell you what's a pip. A pip is the smallest increment of price movement of a currency that can make, also called point or points. For example, 1 pip for Euro USD is 0.0001, and 1 pip for the USD JPY is 0.01. The leverage is the ability to gear your account to a position greater than your total margin. For instance, if a trader has $1,000 of margin, his account will open as 100,000. So we'll give you 1:400, 1:100. Here maximum is to 400. We are basically telling you you can trade more than you have in your account. So this is leverage. So, but anyway, I'll send this book to you because of time. So then I also wanted you to know about the base currency and the quote currency. So the exchange rate of two currencies is quoted in a pair such as Euro USD or the USDN. The reason is because in any foreign exchange transaction, you're simultaneously buying one currency and selling the other. So if I'm buying Euro USD, I'm buying Euro USD and selling USD, I'm buying Euro and I'm also selling Euro USD at the same time. So I'll buy Euro and sell USD at the same time. So you'll have to understand between a base and a quote currency. Very, very important. And then now as bid and ask price. So I believe in my charts, you have seen me doing a lot of bid and ask price here. So this bid, this is what I'm talking about. So we need to understand the bid and the ask price. So it's right here, bid price. The bid price is the price at which the market or your broker will buy a specific pair from you. And thus at the bid price, a trader can sell. A trader can sell at the base currency to their broker. And then the ask price is the price at which the market or your broker will sell a specific currency to you. That's the ask price. You can buy the base currency. So the bid ask spread, or the spread of a currency, will vary between brokers, and it is the difference between bid and ask price. So, and then we have buying and selling, calculating profits and losses, and all that going long. So another way going long is when we go long, it means we are buying the market, and so we want the market to rise so that we can sell back our position at a higher price. So like here, here we were selling the market. This is with the oil, and then now we are buying. When the market is low, we are buying the price. When the market is low, we are buying. When the market is very high, we are selling. So most likely we should still be selling, because I mean not selling, buying, because this energy crunch is still high. Like the demand for oil is still going up because of the recoveries and also because of the vaccines. COVID rates are also going down. I think we are almost at 2% in the country. So that means in the coming few months, we have November and December, we expect this price might still keep going up. I'm targeting at least by December, oil might be hitting up to $100 per barrel because of the energy crisis. So OPEC has to increase supply because now the demand is too high on oil. So it's good for you to know. So when we are going long, it means we are buying the market, and we want the market to rise so that we can sell back our position at a higher price than we bought from. This means we are buying the first currency in the pair and selling the second. So if we buy Euro USD and the Euro strengthens relative to the dollar, we will be in a profitable trade. Going short. So when we are going short, this is to mean that we are selling the market. So we want the market to fall, so then we can buy back our position, like what I've shown you on oil. So last year I was selling a lot of oil. I really love trading oil and the commodities. So when it's going down, we are selling. This means we are selling the first currency in the pair and buying the second. So if we sell GBP USD and the British pound weakens relative to the dollar, will be in a profitable position. So, but today I won't be touching oil. Today I'll be touching another pair called the New Zealand USD. So this is what we'll be doing. You can see here you are buying, here we are selling. Now it's low. We expect to be buying around this area. So I'm just introducing you to technical analysis. And then we have things we call order types. We have market order. It's market order is an order that's placed at the market and is executed instantly at the available price. So if I click here, new order, and buy immediately or sell at this price, that means I've executed at that specific price. Then we have limit entry is placed to either buy below the current market price or sell above the current market price. This is a bit tricky to understand. Anyway, then we have stop loss and stop entry, trailing stop, and the rest. So these ones are I'll let you read for yourself. So that today I want to introduce you to technical analysis. And technical analysis, I'm going to start us with something we call support and resistance. So let's have a look at introduction. What is technical analysis? So we also have candlesticks. So this is support and resistance. So just a minute. So support and resistance is one of the most widely used concepts in trading. Strangely enough, everyone seems to have their own idea of how you should measure support and resistance. So this is one of the very, very, very most important analysis, or the most important thing you should learn when it comes to technical analysis, because now market always forms support, resistance. So you can see, is it going up, then down, goes up, then down. So let's look at the basics. So you can see it's a zigzag pattern making its way up. We call this a bull market. Bull market means the markets are trending on an upward direction. Bear market, that means the markets are trending on a downward direction. So when the price moves up and then pulls back, the highest point reached before it pulled down is now resistance. So you can see the highest point it reached here is called resistance. As we go back, we form something called a support. So resistance levels indicate where there will be a surplus of sellers. That's what we are looking. So resistance. So when there are so many sellers, that's when now you see either they are taking profit here so that the price traces back. Then now here, buyers or other people see a buying opportunity. That's why they're able to go long again to buy. They form another resistance, sells, another buy, like that, like that. So basically, that's what it means. So when the price continues up again, the lowest point reached before it started back now is support. Support levels indicate where there'll be a surplus of buyers. So now that's under the support. Surplus means we have a lot of buyers around the support. They're looking to go long or to buy. When the price continues up again, the lowest point reached before it started back is now support. So I hope you understand that. And support levels will indicate where there'll be a surplus of buyers. And in this way, resistance and support are continually formed as the price moves up and down over time. So, and this will be the reverse during a downtrend. And in the most basic way is support. For you to trade support and resistance, there's something we call trading the bounce. How do you trade the bounce? You trade the bounce, buy when the price falls towards support, or sell when the price rises towards resistance. So that's called the bounce, means it's bouncing. Let me show you, like here, you can it touches here, then goes up. So we'll also be drawing support and resistance in form of red line, like that one is a support I've drawn. Then this is a this is a resistance, this is support. So then we have another one around that area. So that's another. So those are 3 lines. This becomes my resistance. This becomes my, when the market is going up, is also a resistance. This is the major resistance. This is the major support down here. So when the market was going down, you see it bounce back up, goes down. Then there's another strong support around this area, around that area. So you can see market retraced here, 1, 2, 3, 4, 5, and then it went up, came back again, went up. So this is a very strong, this zone, we call this the support zone. So let's continue. So trade the break, buy when the prices breaks up through resistance, sell when the price breaks through support. So if it broke here, if it came here and broke here, that would be the break. But now you see it touched, then went back up. So this becomes the bounce. Then it touched the resistance, went down. This becomes the bounce, because now the price touches here, then goes down back again. So a bounce and a break, say what? If you're a bit confused, so at least I've shown you. One thing you need to understand about support and resistance, it's like there are specific zones or there are specific levels. So with candlestick chart, this test of support and resistance are usually represented by the candlestick shadows. You can see the shadows. So now notice how the shadows of the candles break past support, but end up closing above it. So how do we truly know if support resistance were broken? There's no definite answer. Some argue a support or resistance level is broken if the price can actually close past that level. However, we find that this is not always the case. For example, you can see support, but then the price almost broke, but then went back up. So mostly you will see forms of case scenario. So because now this was the main price that was held by support, but it somehow went down, then came back again. So what we are looking at, we are looking to plot the support line, means is the price at which price could not go beyond that area. So that becomes our support. Then above here, that's where the price could not go beyond above. That becomes our resistance. So if you have believed this was a real breakout and sold, you would have been seriously hurting. So you see, if you would have sold here, the market somehow came, then reversed back up. Okay, let's continue. Looking at the chart now, you can visually see and come to the conclusion that support was not actually broken. It is still very much intact and now even stronger. Support was breached, but only temporarily. So to help you filter this false breakout, we should think of support and resistance more of as zones rather than concrete numbers. So as I've told you, you see I've drawn this zone between 69171, 68395. So this is my support zone, because you can see this was my strong support, but somehow price almost broke, but came back up. So I'll also be introducing to you why this happened, but this will be later on as we learn more about technical analysis. So one way to help you filter these zones is to plot support and resistance on a line chart rather than a candlestick chart. The reason is that line charts only show you the closing price, while candlesticks add extreme highs and lows to the picture. These highs and lows can be misleading because oftentimes they are just the knee-jerk reactions of the market. It's like when someone is doing something really strange, but then when you ask, you hear him say it's just a flex. So when plotting support and resistance, you don't want the reflexes of the market. You only want to plot intentional movement. So you can plot them like this as a line chart, because you can see these are the resistance zones up. Then down here, these are the support zones. You can see these zones. So these zones here, these are the support zones. Let's continue. So other interesting tidbits about support and resistance: when the price passes through resistance, that resistance could potentially become support. The more often price tests a level of resistance or support without breaking it, the stronger the area of resistance or support is. When a support or resistance level breaks, the strength of the follow-through move depends on how strongly the broken resistance had been holding. So you can see what I was saying. You have very strong support. If the candles have been retested many times, you have strong support. If they're retested many times above here, you can see there are so many here, this becomes resistance. But now as the price moves up, it forms minor resistance and minor support. So you can see minor support becomes, the minor resistance here becomes minor support, because the price went down, retested, went back, retested. So now my minor resistance becomes minor support. Then the price went all the way up, then down again, minor support, minor resistance become minor support. So that we'll be learning more as we continue. So this is now more on technical analysis. So here it is. So this is the bounce. So I put a little ball so it looks like a bounce when you are bouncing the ball. So if it moves past that support, it becomes a break. If it hits, then goes up, back, that now is what we'll be calling the bounce. So let's use trend lines to understand support and resistance. So they are probably the most common form of technical analysis in Forex trading. They are probably one of the most underutilized ones as well. If drawn correctly, they can be as accurate as any other method. So let's draw them. So unfortunately, most Forex traders don't draw them correctly or try to make the line fit. So they look like this. So it's a price that have been tested on an upward. You can see it touches, goes, touches, goes, touches, goes. So you can see this becomes a trend line on. So the trend line on an upward move becomes support. The trend line on a downward move is becoming resistance. So you can see it touches, goes down, touches, goes down, touches, goes down. So you'll see a smooth line going down there. So I'm going to draw the trend lines on my New Zealand. Then we'll have a look at how they operate. So in their basic form, an uptrend line is drawn more along the bottom of easily identifiable support areas in brackets valleys. It's also called an ascending line. Then the descending line is the opposite. In a downtrend, the line is drawn along the top of easily identifiable resistance areas or peaks. So how do you draw them? So let's draw them. So you can see downtrend, uptrend, sideways trend, uptrend, downtrend. So the blue one is the uptrend, the red one is the downtrend. So we have uptrend, higher lows. You have a downtrend, lower highs, and then we have sideways trend, what is ranging. So it takes at least 2 tops or bottoms to draw a valid trend line, but it takes 3 to confirm a trend line. The steeper the trend line you draw, the less reliable it's going to be, and the more likely it will break. So like horizontal support and resistance levels, trend lines become stronger the more times they are tested. Most importantly, do not draw trend lines by forcing them to fit in the market. They do not fit, then that trend line isn't a valid one. So let me finish on channels, then we are going to draw a trend line, and then we'll be able to see how they operate together with the channel. So if we take this trend line theory one step further and draw a parallel line at the same angle of the uptrend or downtrend, we will have created something we call a channel. Now we are not talking about TV channel like National Geographic. No, they are trend channels, also called price channel. The upper trend line marks resistance, the lower line marks support. So both the tops and bottoms of channels represent potential areas of support and resistance. So you can see them. Now you have two lines, you have two lines. So this becomes an upward channel, a downward channel, an upward channel, a downward channel, and a sideways channel. So to create an up ascending channel, simply draw a parallel line at the same angle as an uptrend line and then move that line to a position where it touches the most recent peak. This should be done at the same time you create the trend line. To create a down ascending channel, simply draw a parallel line at the same angle as the downtrend line and then move that line to a position where it touches the most recent value. This should be done at the same time you create the trend line. When the prices hit lower trend line, this may be used as a buying area. When the prices hit an upper trend line, this may be used as a selling area. So we have ascending, descending, and horizontal channels. So let me draw the channels. I don't think there's much. Then how to trade support and resistance. So let's finish how to trade support and resistance. Then now I'll be able to trade for you. I mean to draw for you the channel. So I have my New Zealand here. So let me finish first on theory. So now that you know the basics of how to trade support and resistance, trying to apply this basic but extremely useful technical tools. So you can decide never ever to trade any other analysis but pure support and resistance. So the idea is you just need to know when the prices are low, you're buying. When the prices are very high, you're selling. But you have to confirm where the trend is going. That is where fundamental analysis comes in place. So I've talked about the bounce. Can you see this was what I was calling the bounce? Just look by the picture. Can you see? Can you see the trend line, then the break? So this is the break now. You see it came and broke through the support and it's gone. Then there's also another way here you do it. It's a pullback. Goes up, tries to pull back to support, then goes back down. So that's another way. Then now let's do a summary of trading support and resistance. So here is it. Think zones, reverse, and the rest. We have looked at retest. Can you see it breaks, retest, then come back? Breaks, this is the breakdown. Breaks, this was a retest, then goes back. So your entry should have been around here before the price went for a reversal. Then this is an uptrend line. Then I think I've shown you a downtrend line. This is a trend line. And then this is another trend line. So I'll be drawing this. So let me go now to the practical. So that we analyze New Zealand USD. So here's my chart. So this is my New Zealand USD. I'll show you how to draw the trend line. I can see one trend line here. So this was a trend line, a very good one. So can pull this up to around here. So you can see I've drawn. So you take the horizontal line around here, then you place it within. Then I think I can see another trend line that was around this area. So just a minute. So this was a very good trend line, a channel now. So you can see the market goes up, touches, goes down, touches, goes up, almost touches. So now the breakout was around here because you can see the candles broke completely, then came back, retested again, and then now price went up. So this was a very good downward channel when the markets were falling. So at least that's one way to draw. Then I think there's also another trend line here. Yeah, you can see this was trend line because now it was retested one. Let me show you. 1, 2, 3. So the breakout was around this area. So it seems this pair has been having a lot of trending. So you can see this is another channel. Goes up, down, then broke around this area. So let me delete that now. So in case you have questions, ask. So now we are at here. There's also another trend line, but it's not very visible here because you see it's not been tested many times. Only 1, 2, 3. So let me draw another one, but this one is not very visible. So what I'm going to do, since this one is not visible, I'm just going to be trading support and resistance. What do I say? So you can see when the price is moving up, this becomes my resistance, and then this becomes my support. So I think that's all for today. I didn't have much. I just wanted to introduce you to support and resistance because of time. So that at least we begin now on candlesticks trading. And then what is a Japanese candlestick? So on candlesticks, I'm going to send you some material on the WhatsApp group. Then from there, I think we can be good to go. So today I was purely introducing you technical analysis. So technical analysis is the study of this price action. So the other thing I'll maybe introduce you probably would be moving average. Come to indicators, then you click on trend, and then you can add maybe moving average 14 and maybe 5. So 5, I can give it yellow or orange. Let's give it gold. So there it is. So what it's doing, it's tracking price action, but I'll be using 1 hour chart. So you can see there's a big candle. Big candle means the trend seems to be really moving up. So I'm also going to bold this one like that. Then I'll use H4. So you can see on H4, where they are crossing seems to be going down. Where they are crossing seems to be going up. So there was a lot of consolidation. That's why you see this breakout. So on New Zealand, at least I'm expecting it back up. Maybe you can say up to here. That would be an extra 134, 131, 9 pips. So any questions? So I didn't have much. So because today I was just introducing to you support and resistance. Purely is whereby the market reaches at the last point or the highest point it reaches before it reverses. So this was strong resistance because it was tested 1, 2, 3 times. So this one also, let's look at D1 because D1 is easier to see. It was tested a couple of 1, 2, 3, 4, 5. Let me show you. So it's good you draw the red line because the red line indicates, just a minute, around there. Yeah, so that you're able to see how many times it's been tested. You can see there's 1, 2, 3, around 4, 5. Yeah. So that's why I'm saying this should be an uptrend because this becomes a very strong support area, this zone here. So what you do now with support and resistance, we'll have to be combining it with things we call oscillators. So what are oscillators? Oscillators I'll teach you to relate, especially stochastic and RSI. So this is where you're looking at overbought and oversold positions. So like here, you can see the entry was really nice here because it formed a W and there was a lot of oversold conditions. So that means the market became oversold. We did not have any more sellers around this area. So that's why you see the price started moving up, or right now it's showing like it's really moving up. When it reaches 80, it becomes overbought. What does that mean? There's too much, but I mean, the buyers are too many and they want to exit or take profits. So most likely that's why you see around here the market started falling because there was a big buy, then they became a sell. So that's why I'm expecting probably a big buy. So once it hits on this line, it either has to break or bounce. So the break is when the price breaks through this red line, and then the bounce is when the price goes back down. So I think, do we have any questions? So for today, any questions? So for today, I won't go much because we have a lot to cover on technical analysis, but mostly I'll be showing you how to read it. To read it means through the zones or through the price. Then apart from reading it, you'll be able to apply it, especially on technical analysis, just reading the price alone. So I can go to another price like Euro USD. You can see it's on there over. Can you see, okay, as I was saying, it's really down. When it's really down, don't start selling because that's mean that the sellers are exhausted. So here there's a surplus of buyers accumulating. So you'll be expecting most likely price to go up. Same case with GG. You see, like here again, the price went up. This is on D1 on GJ. GJ means this is GBP, JPY. So let's look at another pair like gold. Yeah, gold is also a good one. We are at 1757. We traded the NFP on Friday. For those guys who are available, we made some good money. And now I'm also expecting gold to go back to 1800 at least. Because you see there's a surplus of, you see within this yellow line, this is my zone. That is to mean that within this area, there's too much. The sellers are exhausted. They have taken their profits. There's accumulation of a lot of buyers, momentum. And then what do I do? How am I able to confirm that? Let me show you. I'm able to confirm that with the RSI. So you can see why? Because now RSI has already hit 100. Now it seems to be, and then we have a yellow bar. Yellow bar is to show me there's low volume. Same case with NASDAQ and the rest. So for today, I was mostly on New Zealand. So what I'm just showing you is how to trade up and down movements using support and resistance. The only thing maybe I'll add on our next class, that should be on Thursday, God willing, that should be understanding candlestick trading. Because today I didn't want to give you much, because on technical, first of all, understand support and resistance, understand the trend lines and how you draw them. I've shown you how you draw the trend lines in the channel. But now we'll understand this candlestick, how it works. When I zoom in, you'll have a psychological aspect of what this candlestick is all about. So I'm going to send you some materials right now on candlesticks so that you'll be reading. So that now we'll combine this knowledge on support and resistance. And also we'll combine it now on Thursday. I'll only add moving average and candlestick trading. So let me show you. So you can see Japanese candlesticks. So that's what we'll be doing as from next week, not next week, as from Thursday. So that at least now you're able to understand basically how candlesticks operate. Because what happens, every candlestick has a psychological aspect, like this one. So we'll understand the name of these candles and what it appears. We'll understand what this candle means. Now I'll go even to H1. We'll understand what this candle means, if it's big and it's long going up, and then how you interpret the market. If I come to H4, we'll understand what this spike is. When I come to D1, let me look for gold. So you'll understand also what this spike is all about. So I'll also be explaining what this spike is all about. So on oil, no oil, not oil. Let's go to UK 100. So this is the UK stock market. We'll also understand this aspect of the market. Why is it, why it fell like this? So the idea is you always need to have at least a reason of your buying or selling, technically and fundamentally. The reason is once you understand aspect of sentiment. Right now, as I've told you before we began class, we were able to see oil is very up. It has hit, as we saw, almost $83 per barrel. So this is to mean there'll be a lot of inflation, because now you have to spend your money. Because now if oil goes up, the cost of living goes up. Everything goes up. Cost of goods, services, everything just doubles. Why? Because now there's a lot of demand for oil, but there's not enough oil. So OPEC, that is OPEC means, what does OPEC mean, John? Operating? Organization of Petroleum Exporting Countries. Yes, sorry. So for them, they have to increase supply. Why? Because now demand is high. People want to consume more. Why would they want to increase supply? Because now this oil, once it hits 100, we don't have enough supply to give the world. Your cars, your automobiles, cruise ship, airplanes, and all. So when that happens, you have to spend more from your pocket. So this is the time now to really learn and come and trade. Because now in the next year, probably things will be very expensive, from your clothes, everything. At least the only thing that will go down is electricity. But anything else should have to be going up, from goods you wear, anything you buy, because just purely because of this oil. So you really need to understand, when we'll be doing the fundamental analysis, we'll be understanding the movement of oil and how oil is able to affect the global economy, because oil is one of the major movers, because the dollar is priced in petrodollars, the normal dollar we have. So right now, if I look at USDN, and you see USDN, so it also has been gaining. This is on weekly. It is really gaining. Can you see? Juu sana, very high. Let me even go to D1. So even if I zoom out, the dollar is very high. Like, can you see? That's where we are. I can't even go to, let's go to weekly. Yeah, that's where we are. So we are at the highest. So the dollar is either it breaks this resistance or bounces back down. But right now, demand is very high. So that's why you're seeing oil is that high, and also the dollar is that high. So anything on the dollar base currency means is on this side. It's been gaining at least the better part of the year. This is on the weekly chart. So this is from January up to now. It's been very high. So that is to mean right now there's a lot of liquidity and a lot of float and a lot of money out there. So these are some of the things you'll be learning. So, but it takes time because there's a lot of knowledge you have to acquire, or you have to keep coming, because for you are able, for me right now, I'm able to know. So right now I can buy the dollar because the dollar is overbought right now on the weekly chart. So the reason is you should have been buying since the beginning of the year. So right now my job here is to wait. Why am I waiting? I'm waiting because they might tamper with the interest rates next month. That's November. So what the market is doing right now, it's preparing for that tamper. So it might shoot up, then shoot down back. So that's why me, I'll be waiting for that big move. There's a big move that will come on the dollar. So that's what I'll be waiting, and we'll be trading even those interest rates. So especially from next month, I'll be showing you how to interpret and trade them. So that's purely on technical analysis. So unless we don't have any questions, I think I'll end my class there because I had a lot I was doing. Then we can link up later on, probably on Thursday. So any questions? So I don't think we have any questions today. So let me end my class at that. Then I'm going to link up with you, especially on, I'm going to link up with you on the WhatsApp. So I'm also going to send the materials and also the link for the class. So today we were just introducing support and resistance. And then in case you have any other questions, we can link up from the group. So thanks a lot and have yourself a lovely day. So thank you guys. Enjoy. Let's link up on Thursday. Have a lovely week and a profitable one. Goodbye.